If you're earning minimum wage, it can be tough to make ends meet. However, with the right strategy, you can start building wealth. For example, if you invest just $50 a month in a high-yield savings account, you can earn around 2% interest, which translates to $12 a year. This may not seem like a lot, but it's a start. As the saying goes, a penny saved is a penny earned. Consider setting up automatic transfers to make saving easier. Creating a budget is essential to building wealth. Start by tracking your income and expenses to see where your money is going. You can use a budgeting app like Mint or Personal Capital to make it easier. Allocate 50% of your income towards necessities like rent and utilities, 30% towards discretionary spending, and 20% towards saving and debt repayment. For instance, if you earn $1,500 a month, you should aim to save $300. Investing in index funds is another way to build wealth. Index funds are a type of investment that tracks a specific market index, like the S&P 500. They offer broad diversification and tend to be less expensive than actively managed funds. For example, if you invest $100 a month in an index fund with a 7% annual return, you can potentially earn around $1,400 in 10 years. Consider using a platform like Vanguard or Fidelity to get started. Avoiding debt is crucial to building wealth. High-interest debt, such as credit card debt, can be debilitating. Try to pay off high-interest debt as quickly as possible and avoid taking on new debt. For instance, if you have a credit card balance of $1,000 with an interest rate of 20%, you could end up paying $200 in interest over a year. Consider using the debt snowball method or debt avalanche method to pay off your debt. Taking advantage of tax-advantaged accounts is another way to build wealth. Accounts like 401(k) or IRA offer tax benefits that can help your money grow faster. For example, if you contribute $5,000 to a 401(k) and your employer matches 50%, you'll have a total of $7,500. Consider contributing to a tax-advantaged account, especially if your employer offers matching funds. Building an emergency fund is essential to building wealth. Aim to save 3-6 months' worth of expenses in an easily accessible savings account. This will help you avoid going into debt when unexpected expenses arise. For instance, if you earn $1,500 a month, you should aim to save $4,500 to $9,000. Consider setting up automatic transfers to make saving easier. Investing in yourself is another way to build wealth. Consider taking courses or attending workshops to improve your skills and increase your earning potential. For example, if you take a course to learn a new programming language, you could potentially earn a higher salary or start a side business. According to a study by Coursera, workers who take online courses can increase their salary by up to 20%. Starting a side hustle is another way to build wealth. Consider freelancing, selling products online, or offering services in your community. For example, if you start a side business and earn an extra $500 a month, you can potentially save or invest that money. According to a survey by Bankrate, 37% of millennials have a side hustle. Living below your means is crucial to building wealth. Avoid lifestyle inflation by avoiding unnecessary expenses and saving or investing the difference. For instance, if you get a raise and instead of spending the extra money, you save or invest it, you can potentially build wealth faster. Consider using the 50-30-20 rule to allocate your income. Building multiple income streams is another way to build wealth. Consider investing in dividend-paying stocks, real estate investment trusts, REITs, or starting a side business. For example, if you invest $1,000 in a dividend-paying stock with a 4% yield, you can potentially earn $40 in dividends per year. According to a study by Forbes, having multiple income streams can increase your chances of achieving financial independence. Taking care of your mental and physical health is essential to building wealth. Consider exercising regularly, eating healthy, and getting enough sleep. For example, if you exercise regularly, you can potentially reduce your healthcare costs and increase your productivity. According to a study by the World Health Organization, regular exercise can increase productivity by up to 15%. Building a support network is another way to build wealth. Consider joining a community of like-minded individuals who share your financial goals. For example, if you join a financial independence community, you can potentially learn from others and get support and motivation. According to a study by Harvard Business Review, having a support network can increase your chances of achieving your goals by up to 30%. Staying informed about personal finance is crucial to building wealth. Consider reading books, articles, and blogs on personal finance to stay up to date on the latest trends and strategies. For example, if you read a book on investing, you can potentially learn new strategies and techniques to improve your investment portfolio. According to a study by The Balance, reading personal finance books can increase your financial knowledge by up to 25%. Avoiding lifestyle creep is another way to build wealth. Consider avoiding expensive habits and saving or investing the difference. For instance, if you avoid buying a new car and instead save or invest the money, you can potentially build wealth faster. According to a study by NerdWallet, avoiding lifestyle creep can increase your savings rate by up to 10%. Considering used or refurbished items is another way to build wealth. Consider buying used or refurbished items instead of new ones to save money. For example, if you buy a used car instead of a new one, you can potentially save up to $10,000. According to a study by Kelly Blue Book, buying a used car can save you up to 20% on your car purchase. Taking advantage of employer matching is another way to build wealth. Consider contributing to a 401(k) or other retirement account to take advantage of employer matching. For example, if your employer matches 50% of your 401(k) contributions, you can potentially earn an extra $1,000 per year. According to a study by Fidelity, taking advantage of employer matching can increase your retirement savings by up to 50%. Building an emergency fund is essential to building wealth. Consider saving 3-6 months' worth of expenses in an easily accessible savings account. For example, if you earn $1,500 a month, you should aim to save $4,500 to $9,000. According to a study by Bankrate, having an emergency fund can reduce financial stress by up to 40%. Investing in a tax-advantaged account is another way to build wealth. Consider contributing to a Roth IRA or other tax-advantaged account to reduce your taxes and increase your savings. For example, if you contribute $5,000 to a Roth IRA, you can potentially save up to $1,000 in taxes. According to a study by TurboTax, contributing to a tax-advantaged account can increase your savings by up to 20%. Building multiple income streams is another way to build wealth. Consider investing in dividend-paying stocks, real estate investment trusts, REITs, or starting a side business. For example, if you invest $1,000 in a dividend-paying stock with a 4% yield, you can potentially earn $40 in dividends per year. According to a study by Forbes, having multiple income streams can increase your chances of achieving financial independence by up to 30%. Staying disciplined and patient is essential to building wealth. Consider setting long-term financial goals and avoiding get-rich-quick schemes. For example, if you set a goal to save $10,000 in a year, you can potentially achieve it by saving $833 per month. According to a study by The Balance, staying disciplined and patient can increase your chances of achieving financial independence by up to 40%.